Well, hello everyone. I'm Rob Hoffman from TradeTheMarkets.com here with another video. As you probably noticed the last couple of weeks, I haven't been getting a lot of those videos out there for three very good reasons. Number one, I've been in the process of moving my home. Number two, I've been getting ready for the exciting 4-day live event here in Chicago, which is almost upon us. That's really great. And number three, last but certainly not least, I've been getting ready for my son's graduation. Yes, can you believe it? It's finally upon us. So, busy, 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 to say the least. Needless to say, because this next couple weeks is going to get really crazy. Obviously, I dedicate 110% each day to the live trading room, but then I have to go on and do other things. So, I just want to go ahead and get a video out there, and I know there was a lot of great ideas for the free public video for everybody, but I'm going to go and keep it to the currencies because the currencies have certainly been exciting where it's at for me, from my perspective right now. For all of the Apple, Amazon, Baidu, F5, gold and silver ETFs and all that, I'll do that in another, kind of private client video for you from the live trading room. So just, don't worry about that. But from a free public video perspective, what we'll do is let's take a look at the currencies tonight. And a couple different things. This neat concept, and we kind of saw it building up for several days, and it brought some things that we've learned in the past here over the years together. So it was kind of a neat event. And what that was like was in the euro here. This past week, as we went ahead and we're basically just literally kind of counting the days for the explosion. And what I'm talking about is right here. This is really exciting. What was happening was these thick green lines that you're seeing are resistance levels, and these levels were resistance levels down here, which once they were broken, they became support levels. Okay. Well, I'm going to show you something neat that happened down here and then was happening up here. And to start that off, what was basically happening was that we had this count. We moved for the resistance level down here up to here. Well, once we did, that started off a count. All right, let me clear that for you and re-show that to you. At this point, we hit that resistance band. This was day one. Then this was day two. This was day three. Now, in this area right here, I was saying that I was looking for this explosion to the downside or to the upside, which, if history repeats itself, it was going to be to the downside, and that was going to be on day 7. Well, where did I get that? I'm going to show that to you in just a moment. But nonetheless, let's keep counting these bars. So we had number 1, 2, and 3. Then we had number 4, number 5, number 6. Now, on number 6, this was Wednesday. This was a really interesting day for a couple of reasons. We started to go ahead and get a little wiggle out of there, and ultimately, as you can see, closed right back in the range that I had to find. Now, I've had this resistance on there for a very long time, okay? So this was going way back for a couple of years there. And so it's kind of neat to see us get back up to that level. And so what happened was on day number 6, people started to get really jumpy. People are looking at this and thinking, well, maybe the explosion is going to happen early and it's going to be to the upside. And I wasn't really willing to go ahead and get suckered into that. And another interesting thing that happened on that day, people started also talking about doing like more scalping trade. Hey, Rob, let's learn more of your scalping trading techniques. Some of the newer people were asking about scalp trading techniques, to go ahead and to take even more advantage of some of these areas in here on the euro. So it was a very interesting conversation. I said, the fact that with so many people in the live trading room and having me there to guide through each and every day and watching me be very calm, cool, steady, collective, and most importantly striving for consistency, it was a very interesting conversation on that day 6, how people a day in advance of what my target was started getting so antsy. Well, sure enough, what ended up happening then with that is, so we had this kind of confluence of things coming together. People starting to go ahead and get antsy in advance of day 7, thinking maybe it's coming early because too many people are expecting it day 7. People thinking how to take more advantage of some of the micro scalp opportunities in advance because we had had the tighter range for a couple of days. So some neat things happening there. Then you also had one of my fish hooks right there. All right, and then as we rolled into day 7, you ended up going ahead and getting one of my crooked finger sell signals to the downside right before the big move down. So for those of you that have learned about my crooked fingers, my fish hooks, this concept of pausing, waiting for support to kind of catch up underneath, a lot of these different things kind of came together there. So sure enough, what ended up happening was on day 7, this did push all the way back down to resistance, or support. Well, how did I even think that that might happen? Where could we have seen something like that happen in the past? Anybody guess? Let's go ahead and take a look. Right here is an expanded view of the euro, and what you're looking at right now is a monthly chart, a weekly chart, and a daily chart. Okay, what I want to do is go ahead and talk about 2 things on this chart. The euro in particular, the reason why, for those of you that will watch when I did videos with Hubert and with John, the reason why I've been such a raging bull on the euro for so long was because of the fact that we had this pattern in one of my indicators called the Hoffman trend, and basically this is something unlike that we'd seen in over 10 years. All the video or all the data that I can go back basically for my charting service, we never had such a consolidation in my indicator for months on end as we did here. When we get out of that consolidation, it was set to go ahead and be a big explosion. Well, for all of you that have been with me, follow me for an extended period of time, you know that basically I was trading the euro like a madman basically up until the September October timeframe last year. Then when we hit this area here in October, I really started to go kind of dormant on the euro and started trading a lot more crude oil and gold. Okay, so, and that worked out very well. So that didn't stay on the chart, but that was supposed to be CL and GC, crude oil and gold. So from this point here to this point here in particular, actually right about there, it's the end of February at the New York Traders Expo, did a lot more gold and crude oil trading. Then we started kind of kicking it back into gear with more of the euro trading again. So as this started to go ahead and break out. So we had this really nice multi-month consolidation, which is pretty exciting, leading to a lot of great opportunity. Also, you'll notice that we're starting to go ahead and talk more about inflation. The more the market, the US market, goes ahead and becomes sensitized to the possibility of interest rate hikes, the more the news, the weekly news, will become important to us. And that's exactly what happened here. Thursday, part of the trigger here was the ECB commentary, or lack of commentary, some of the things they said and didn't say that really kind of triggered off Thursday's pullback event, okay, and then that continued into Friday. So it led to some great opportunities there that we seized upon. So lots of different things kind of coming together, but what I wanted to show you was, so we talked about that 7-day event. Let's go ahead and see if we had seen that not too long before that at another key area of resistance of mine. Let's actually zoom this in a little bit and go back and take a look at that. Notice here we'd gotten into this speed line area. This was a 3-bar band going back for quite a long time, and I explained in the live trading room, of course, where this came from and how I formulated it. But this is what I call the speed bump, because I felt like we could get up towards the $1.50 level. Now we did just miss that level. We didn't quite get to the $1.50 level that I was expecting. We came a little bit shy of that, but we did go ahead, and I felt like this was a speed bump, a short-term pattern on the road to $1.50. Okay, and so look what happened when we got into the speed bump zone. We have 1 bar, 2 bars, 3 bars, 4 bars, 5 bars, 6 bars, 6 bars consolidating in that speed bump zone, and then whoosh on bar number 7. Okay, so basically history repeated itself very quickly right here from the middle of April, right there as we went into the beginning of May. You only needed to wait a couple weeks longer for that pattern to repeat itself. So pretty neat. So be on the lookout for things like that. Okay. Now, while we're here looking at the currencies, let's go and take a look at a couple of the other majors. As we talk about the Aussie dollar, Canadian dollar, and the Swissy, all 3 of these things will generally be the same for me. In the middle of last year, I certainly did go ahead and trade some of those, but really, from my perspective, I like to look at these, the Aussie dollar, Swissy, and Canadian dollar, more on swing trading basics. By the way, if you're looking to swing trade, you've got multiple different options to swing trade the currencies. You don't have to go into highly leveraged futures contracts. You can go ahead and also trade them off of Forex. Okay, now I have a lot to say about Forex, but suffice it to say that understand the risks versus the rewards. And if you have any questions on that, you're more than welcome. When we have a free event, come to that and ask me, and I'll give you all my thoughts. But that is an option, and certainly a lot of our overseas student family do trade the Forex. I personally trade the futures contracts, primarily traded off of the CME and ICE exchanges. Another option is for you to go ahead and trade the ETF versions. Okay, and those are listed down here: FXA, FXB, FXC, E, and Y. Okay, so there's different options for those of you that are swing traders in the currency futures. But again, as we look at the Aussie dollar, Swissy, and Canadian dollar, I'm going to be looking at those primarily on an end of day basis versus looking to make my money on an intraday basis. Intraday, it's very much like watching paint dry, but if you take the totality of the day, you take the totality of the weeks, they can add up very quickly for those of you that are patient enough to hold over courses of time. So just so you understand kind of my thought on the currency trading there. So as I look at the Aussie dollar, the monthly trend, the weekly trend, on whole, the daily trend are still up. I'd be looking to be buying pullbacks in this instrument. Be fairly bullish down to around the 102 level still in this. So 102 to 101.57. That's, after that, I'd really go ahead and kind of take a pause. The 102 area, you can see we got lots of support all the way down to the speed lines on the monthly chart. But then all of a sudden you've got a good 700 ticks or so, 800 ticks that you could drop before we start shoring up more major support over the long term. So one thing that you might want to do is take a look at this. Pick one of your favorite maybe momentum indicators. I personally use different tools like the what I call my Hoffman trend, where I'm looking then to find short-term pullbacks against the major underlying trend, and then look for that resumption of that trend. You see, like here's a classic example. The weekly and the monthlies are in a long-term uptrend. We have a pull down, in this case to the zero line, and a resumption back up. Okay, those are the kind of things I'm looking for even on an intraday basis for looking for long side setup. So that might be something that you'd be interested in. On the British pound, we're at some long-term resistance. Now, one thing to note about the British pound, for those of you that follow my long-term strategies, this is something we talked a lot about in the live trading room. You'll notice back here, we went ahead and had the Hoffman 2-bar break. So you had this major resistance level at $1.60. We talked about it every single day leading up to this. Then we had the 1-bar break. So we watched diligently for the 2-bar break. We got the 2-bar break. The British pound then pulled back to that level. Well, resistance once broken becomes support. And that's exactly what happened here. So you see it hit it for 4 days here, came back here, hit it for 5 more days here, hit it again for 5, 6 more days back here, and then went off to the races. So we had the 2-bar break here, and then we went ahead and we pulled back, okay, and tested that area, held that area, then it was off to the races. Now, as we look at the bigger picture with that then, the $1.62, $1.60 area, that's going to be a nice support area. I'll be looking for some long side pullback trades off of that area. But make no mistake that from a longer term perspective, such as the monthly chart, you're basically down to sideways. From a grander picture, you can see over here, the longer term trend here, things are coming down to sideways, leaving you only a marginal support level there from a more longer term position, more of an investing perspective in the British pound. So I'd be looking at this more from a shorter term perspective in the British pound to play long side trades off of those key support levels, $1.60, $1.62. Okay, real quickly, the Canadian dollar, very much like the Aussie dollar and the Swissy. They can get some nice trends going. In this case, you have, once again, a nice trend in the Canadian dollar. But the bottom line is, unless you go ahead and are willing to hold these for swing term, swing trading basis or longer term basis, it's much harder, in my opinion, to make your money on these. I don't like to trade them as much on an intraday basis. From a longer term basis of swing trading, I'd like to go ahead and see us hold the 102 level and start to go ahead and have that same momentum concept we talked about just on the previous charts start to shore back up. So show me that we're just getting a small pullback within a more macro trend and start to see that resumption to go ahead and look to be a buyer again. And while we're at it, let's just take a look at the Swissy. Swissy looks the best of them so far. It's hard not to be bullish on this all the way down to the 108.50 level. Below 108.50, I'd go ahead and back off of any sort of swing type trading positions until I got down to around the 102 area. But here again, I'll be looking for that same concept, pulling back to the rising support and momentum starting to go ahead and resume. On an intraday basis, the key areas to note: on an intraday basis, I'm not likely to go ahead and take the pullback supports on the Swissy as we talked about earlier. Okay, Japanese yen, we're starting to get back up into areas where we had some awesome trading. It was not that long ago, was it, where we went ahead and just had some fantastic weeks. If you don't know what that was all about, you can go back, and take a look at some of my older videos here at that time frame of the Japanese yen. Japanese yen went ahead and, like I said, rewarded myself extremely handsomely, both on the small contract side and the large contract side. It was a fantastic week. In fact, like I said, I wanted to give back from that, because of course it was a crisis, the tsunami and the earthquake that led to that. So I'm actually June 1st going to be doing an event with many others. You'll see some upcoming information on that soon. Actually, John Hubert and myself will all be taking part in an aid event to give back. For us as traders, use our talents to seek donations for some information and things we're going to be doing to kind of give back, for providing aid, in the crisis. So bottom line here is that we're starting to kind of creep up into areas where we found some major distribution. Remember, there was some coordinated central bank activity. Japanese asked for intervention help from the central banks up in this area. This was some massive and awesome trading in here. My thought right now is hurry up and wait. This is an area where once again we could get smacked down again. Basically, the way I'm honestly going to be trading this is look for the overnight U.S. time, the 8 o'clock, 9 o'clock, 10 o'clock Eastern time points in the evening. I'm going to be looking to see if those lead to some sharp moves. That's usually where I end up getting those big moves like these, where we get the big gap ups, and then I went and did some great selling off here. I shorted a couple of contracts and rode that down for 100 ticks per contract, and then down when they announced the intervention, just some great opportunities there. And that was in the evening sessions, let alone then what was happening during the daytime. So lots of neat events as far as from a trader's perspective, of course, not the tragedy that led up to it. So where I'm at right now, as we're kind of creeping back up into that area of consternation before, where the market was reactive, I'm going to be watching now in those early evening hours for fresh new trading opportunities. Okay. And then finally, the US dollar, of course, the inverse of the euro basically there. The dollar's just been getting pummeled in the news. And if you've traded the euro enough, you know that what usually ends up happening is about the point when everybody starts joking about the US dollar becoming a peso, or that the dollar is becoming worthless, and it's the end of the currency as we know it. That's usually about the time we start getting those huge snapback rallies. They typically last anywhere from 2 to 5 days, where they revert back into at least the downtrending 20 period moving average. Now in this case, the move was so strong it solved that all in one day. We've actually now even pushed higher than that over the last 2 days here. So technically that short-term objective is already met. So I'll be watching this real closely as we go into Monday here. Both on the dollar, we've got lots of resistance right where we're at, all the way up to the 76.67 area. And then, of course, the inverse of that is going to be the euro here, where we've got some great support here at the $1.40 area, and also right where we're at. So this is going to be a neat reaction area for the next couple of days. The $1.40, $1.39 area, and even right where we kind of came in here around the $1.42 area, multiple areas to support down below us here. So be looking for some short opportunities down as support, and then long opportunities at support. I think that the dollar euro is going to be a story to continue to offer up great trading opportunities. And again, just to remind people, as we talk more and more about U.S. inflation, interest rate hikes, and that'll continue to go ahead and give the currencies a run for their money. So all in all, some really neat trading in these instruments. Don't forget, that 7-day concept here. You can go back and compare it to mid-April and see how that kind of played out there. Also, fish hooks, crooked fingers, the Hoffman 2-bar breaks back there at the end of January, beginning of February, for you to go back and research some more. Lots of neat concepts kind of coming together to really enhance my currency trading. If you want to have a moment of fun and go see a recent video here and see why I'm a professional trader and not a newsweather spokesperson or newscaster, you are welcome to go ahead and go to www.tradethemarkets.com and go down here where it says Rob Hoffman's Trading Room. You can learn more about the trading room. That part is certainly sincere, but of course you can see just how shy I am looking, being on camera there. So have a little fun with that. And then also, you're welcome to, of course, join our live trading room. You can find out all the information about that good stuff right here. And then, of course, I would love to see each and every one of you at our Chicago event here. It's only, it's about 2 weeks away now at this point, so it's almost upon us. So we've been getting ready for that. Moving house, and of course, my son's graduation kept me really busy. So the next time I'll probably poke my head out publicly will be right here at this live event. So I hope that you'll go ahead and consider joining us for this live event. You can go ahead and just take a look right there where it says live seminar to read more about that, or to learn more about the live trading room, and where I spend all my time is right there. Okay, so with that being said, I hope you guys had a lot of fun. A little bit more about the currencies. We'll talk more about the equity and ETF sides and lots of other things in the next live trading room student only video. But for everybody else, I hope this is helpful, because we've got a lot of neat things coming up with currency trading as we now go through the summer trading months. So with that said, good night, take care, and I'm looking forward to seeing each and every one of you in the next video.